The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 18th day of July. 18th day of July. Sister-in-law's birthday, I think it is. Except it's Australia, so it's the 19th there. Right, I'll have to figure that one out. Whoa, mistake. All right, so we've got the 2-minute chart looking at the E-mini. There it is, made a peak, E double top, and a cup formation at 2460.50, which was just under the 2461.25 all-time high. It tested that in the 2-minute chart, and it comes down, and it comes down, it comes down, it comes down, and it hits 2448 round number, and now it's trying to rally. This is really interesting action. Dow's down 100 at 21,578. Let me get rid of this. 21,578. The 120-minute E-mini chart down 575 made that double top at a peak C1, peak C2. And look what happened. Look at the technicals were failing. Right, there's horrible technicals as it was at rebound at 6 o'clock this morning, and then kaplop, comes back down. Now we're very close to some kind of support, so this is going to be very important. In the daily chart, I've got an E/B peak at 2461.25. We've had 2 days with no new all-time high. What's really important here is I think that this is going to be Chapman Wave 4 down, and that we should make a 5 to the upside. Then we're going to have to make some decisions. All right, next thing now, let's go to the nitty-gritties of what we really want to be looking at. The Dow, same thing, 1, 2, 3. This is 4 down, peak C in the Chapman Wave. There should be a D. I could have given an alternate count. I don't see any reason for it. There was a cup and ladle breakout pattern, and we've tested the inside of that. That was the high of the 10th of June, 21,535. We've gone under it. We're at 21,524 right now. And I suspect that somehow or other we will squeak to a nominal new high. Then I think we've got to start being careful once again. That's on the daily. The weekly chart I've got here as a leg C to the upside. And that implies that even if there is a pullback, that probably we're going to have to worm our way into probably late July, early August, and then we're going to be looking at something a little deeper. So the Dow has gone to this peak D in the 120-minute chart. Look at the S&P. So let's just make it real clear. Dow has very strong resistance in the 21,680s to 21,690s. Strong support kind of where we went earlier today, but probably the 21,480s is the area that really needs to hold on the short term. You go to the S&P, it's almost the same sort of thing. Now here I've got it. It could be an alternate count E/B, but because the MACD is very strong, stochastics at 91%. S&P is only down 4, minus 0.16. The Dow is down minus, I can't see right now, minus. I shouldn't have said that before I saw the percentage. Usually I can't see it. Yeah, minus 50. So that's a 0.50, that is. So a much deeper decline there. Now, this is going to be very important. If this is B, then the S&P should still go to a C and a D, and that makes the 2468 to 2472 area very strong resistance. It also coincides with the trend line, rising trend line resistance, 2466, and then by next week, 2468, 2470s, yeah, somewhere around the 2468-ish area. We're going to be watching real closely. Now, this is going to be the key support. 2445 to 2440 has to hold, has to become a kind of a springboard for a move higher if later on today we start to turn down. If you're looking at the QQQ, now this is fascinating because the QQQ, of course, has Netflix and FLX right here. Look, Netflix is up 19 at 181. Spikes, breaks out in the weekly chart. Let's get rid of this 120-minute chart for now. Don't need it. Right there. And this is a leg C. It's only in a C in the monthly chart. Amazing action. And what's even more important than that is, why is it stuck? Okay, even more amazing than that, this leg of leg C, of course the month still has about almost 2 weeks to go, a little less, is the power of the MACD and the stochastic. So that's very good news for the Qs as well, because it will help. So let's go back to the QQQ series and say that this is probably a doji candle yesterday. Peak A with no new high today is probably likely, but it's very important this week that we see if there's going to be a break to test the all-time high of 143.90. You need to see a close above not just 142.69, yesterday's high. You really need to see a close in the 142.90 area to say, okay, on our way to retest the all-time highs. So far, the MACD and stochastic are very strong. Nothing to short here, at least this, not right now. There's still residual strength. Actually, I would call it internal strength in both the 120-minute chart and the daily. The weekly chart still has the MACD cross positive. Isn't that interesting the way that happens? And it's still leg C in the monthly chart. Let's go to the IWM. We'll just run through these indices quickly. IWM, oh, Mike asked for IWM. Yep, we're there. This has made a gray peak C because it's under the 142.90 high that was made at peak D on the 9th of June. Where there was this reversal, making two cup formations with lower lows and lower highs. And what's really important is the weekly chart is still holding pretty well. I'm suspecting that there's kind of limited upside in the IWM. It could make a new high, but limited upside. And at the same time, at this particular point, I think there's limited downside as well. Let's go. I want to go to a number of things. So let's just go to gold. Gold is up quite nicely here. It's up 7. It's not fantastic. You would expect. Look, these are very nice candles. There's just no denying it. You've given back all the decline from the 3rd of July, where we open at 1241, go a fraction higher, and then plummet all the way down in the next 4 or 5 sessions down to a low of 1204. Now you're back to 1240.90. I like the action. It's the reason why for subscribers we have got a gold stock, but at the same time I really am kind of disappointed in the way. Maybe it's good that it's a slow move to the upside. Let me just check on silver. SI silver is up in leg B. It's a little bit stronger in terms of patterns, but it hasn't taken out the July 3rd breakdown from 60.645. So yes, good action, but all right. All I can say is that I think there's a turn in the corner in the gold, and if you put this together with, I'm going to do it right now. Look, with the dollar, I know that Steve Rhodes has got a real nice indicator. He uses the yen. I look at the yen, and I always talk about market patterns that match other patterns. But most importantly, I do see the correlation between gold and the dollar as a traditional reflex action, that when dollar is weak, perhaps not the same percentage, but you usually find some kind of strength in gold. And what we've seen right now is over the last 4 sessions, the dollar's plummeted down to 94.52, and gold has not really made the same kind of spike to the upside as as the dollar has done to the downside.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and we were looking at BCE for one of our dinners. BCE trading at BCE Inc. I don't even know what they do, but they're trading at 45.93, up 2 cents in leg D in the daily. I think it's going to be pulling back a little bit here at 45.93. 45.52 to 45.30s is the key support to hold on the short term. The weekly looks like it's making a cup formation, should try for a leg D, and that would be above 46.20, 46.31. Okay, and then that would start a new gray leg C in the monthly because it made that peak B all-time high and then pull back quite sharply, but didn't pull back to break any buy mode. This is still in a buy mode. That should be a cup formation. Okay, hope that helps. Oh, Bell Canada, of course, Bell Canada. BCE. Huh? Why did I not know that BCE was Bell Canada? All right. A couple of questions we had. Let's just do this. I looked at gold. Let's look at crude oil. CL is trading up 39 cents at 46.63. Fascinating. Why? Because, look, you've got the strong leg A to the upside, and then it gives back, and it rallies again, and it rallies just above this trend line resistance right there, but doesn't close above it. And now you've got a triangle. You've got this wedge formation. And, of course, there are a whole bunch of techniques that it implies. My implication is always that you're looking at a potential for a rising wedge formation, but at the same time, the two fighting patterns, one is the cup formation, and one is, and make it real simple, if you do this with your technicals, you just grab that and pop that in, and you say to yourself, let's be as conservative as possible, and that would say there's a mini rising channel, and if it takes out the high of 47.45, it was made on the 5th of July, that'll be very good action. If it fails and it slides and closes underneath 45.40, it's at 46.60 right now. So if it slides even $1 from here, it's really not going to do much. Weekly chart, the price was kind of good, but the pattern is terrible. It needs to get into the 48.20s, and it needs it soon. Why is the bar on 622 not wave A? Bar on 622. We're talking about crude oil, right? 622. 21, 22. Oh, that's because I don't have any peaks until I get to this one right here. I think that's what you should have as well. Okay, good. So this is gray A because it's way under the previous high. This is actually new leg B, gray leg B. If you want to be nitty gritty in the Chapman wave methodology, that's B, and we call it a gray B because it's under previous highs. All right, and this is just only A in the, once again, in the weekly is starting to flatten out. It should actually close on Friday above the 9-period moving average. So let me put it this way. If crude oil at this particular point in gray leg B is able to punch through the 47.45 level and then close above it. In fact, let me make it clear. A close above 47, I'm not even going to say 45. I want it higher. 47.65, a point higher. And all of a sudden, I'm going to say to you, you know what? The better pattern is a breakout. I like it. And that starts leg B in the weekly. First time we've had a B. We've had plenty of A's that have failed. And that'll be a positive. And then I'm going to say crude oil can now go higher. And if we can get to 50.56, the 200-period exponential moving average, what crude oil? I'm doing the continuous contract. If I had to go to CLU 17, probably it's a UV, V or something. Yeah, it's the same pattern. We're looking at the same thing. So there's not too much. If I go to the USO, I bet it's the same thing. No, I bet it's not the same thing. Look how close we have gotten. USO had a high of 963 on the 3rd of July, and we've gone to 961, 960, 960. Yeah, pretty much the same thing. It is the same thing. All right. So it is improving. But that weekly chart mustn't break down. It has to break outside, on the upside, that is. All right. Let's go to next question. So BA, which is Boeing, leg E in the daily, leg E in the weekly chart. One of the reasons why I'm getting a little bit cautious again is that is on the Dow and that type, not so much the Qs at this particular point, although I did mention for my subscribers that SMHs, well, let me finish BA. Boeing trading at 208.42, down 57 cents, made a high yesterday, all-time high yesterday, little doji candle. Watch this closely, because if there's no new high by Thursday, let's just go with Friday. If there's no new high by Friday above the 209.72 high of yesterday, but instead we're now in the 206 to 205 area under the 9-period moving average, I'm going to be watching this closely, because then I think Boeing's starting to show signs of a potential, at least short-term top right here. SMHs pulls back, rallying now. It's down only 9 cents. I think there's going to be a single leg A to the upside. But any new high, not just a new high, a recovery high that is, above 87.04, I'm going to make it 87.55. I really want to see it break to the upside and close above the 87.50s, because if it does that, I just have no choice but to say, you know, we could see a U-shaped formation. If there is a failure and the SMHs, the market vectors semiconductor ETF, actually closes under 85 in the next 3 sessions, Tuesday, Wednesday, Thursday, Friday, going into Friday's closes under 85, no, under 84.70. I want it decisively under the 9-period exponential moving average, probably trying to test that gap right over there, the gap low of 85.24. That would say to me, uh-oh, single leg A syndrome, watch out, watch that stochastic. Stochastics are 91% and very good. If it breaks down and goes under 80% on any slide, that's going to be a big negative. So far, this is still a nice retracement, trying to get back to the all-time high. Next question was UTX. This is fascinating, because UTX, which is down sharply after a peak G, as I mentioned yesterday, and a leg E. This is the reason why I'm, once again, getting my sights set on a potential short in some of the indices. I think that the upside is starting to show that it's sort of limited until this, and I still believe we're in a correction. How can I put this? I don't make it sound weird. Look, if you look at this cup formation Absolutely, it's a bull market, and we've been going higher and higher. But if you think that at 2169, at 2576 right now, just 400 points higher, 400 points is a relatively small percent. What's 4%? Oh, wait, no. No, less. So it's just 2.5%, something like that. But what we're looking at is we really haven't broken out in a vertical move like out that way when we went from February into the March high. So this is very nice, steady move up to the top of the range. But I got to watch this real closely, because I think from all the indicators that I'm looking at, if there is a move into the 21,750s, I have to consider breakout. That's the kind of breakout you want to see. Big moves to the upside, small pullbacks, big moves to the upside. So I'm watching this closely. Mike, we will look at platinum right as I'm going to the break. PL is
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So a question about coffee. Coffee is in a long-legged doji yesterday. It's holding quite nicely. It's at peak C. MACD and stochastic are very good. Weekly is in leg E. Now, this is leg A. And this is what I like. You see, this is a breakout of consequence. I don't see that now. By the end of the day, we might certainly see it. But for gold, I want to see it above all that nonsense on the left. I want to see it above 1260. And not only will that be bullish, but that'll say, wow, that's going to change the pattern in the weekly from an arch formation to start drawing in a cup formation. That's going to be very important. Yeah, so it's good. but not yet great. We'll see what happens. Okay, I did want to show this quickly here. You remember the 120-minute chart has gone to a leg B. That 200-period moving average, the green line. Look how powerful these things can be. Look at that green line. Yeah, it was. Look at that resistance right there, back at 8:10 on whatever day that was. Is that this morning? On the 18th of July, and that's today. And now we're in leg B, right at that green line, at the 200-period moving average, having pulled back from the 250, 56 area all the way down to 2448, 2456. And now we're bumping up against that resistance, and there's that long-term downtrend channel trend line resistance. All right, so a couple of things I wanted to mention. I was asked about the VIX index, a whole bunch of questions on the VIX. Can the VIX go to, what was the number? Can the VIX go to the 16s? Let's do one step at a time. We're at 10.04. We haven't even been able to hold in the 12s, so let alone the 16s. But if there is tremendous fear, that'll definitely happen. I don't see that right now. I think we can meander in a choppy range, moving slightly higher for a little longer. So what I'm looking at 10.03. The high today at 10.35 just touched the 200-period, the 9-period moving average of 10.30. You want to see it break decisively higher. I think there's going to be some buying here. I think we're kind of done-ish with most of the down move, and we've done the consolidation. Maybe I should just do this. Look, I have two patterns in the 120-minute chart. This is very unusual. Usually I have the same letter, or I have an alternate letter, but they're the same. The same chart, 120-minute Dow chart, without the MACD and stochastic over here, with that up channel resistance. Look at that Chapman wave inside track repellent zone, pulls back under the green, the 20-period moving average, still under it, it's trying to rally. And now look at this little tiny candle right here. If you look at this, that gave a peak D and said, hey, that's exactly what you should expect. That's why it was deeper than it would have been at a peak C. However, this is what I'm really looking at, that there should be a rally, and that rally should take you to at least a modest new high in the Dow over the coming 2 days or so, and that would be above 21,681, and then we got to reassess. That's the 120-minute chart. If you're looking at the daily, look at this, the daily in two chart formations. Peak C was formed 3 days ago. Leg C yesterday confirmed peak C. I'm calling that 3. I'm calling this Chapman wave 4, and that should take you to a D. And that D should be above 21,000 right there, 21,681. And there's your peak C. Now, I could have given an alternate count. I just didn't see any reason when the stochastic's at 88% and the MACD is good. Okay. So that's what we're looking at. Most of the damage is done. We went past the 9-period moving average support. We didn't get to 21,444, the 9-period exponential moving average support. So in the daily, so far, this is good action. This should be a slow recovery over the period of the day into tomorrow. Now, let's do a couple of things. TLT. Oh, I didn't mean to do that. Indeed, you should have changed charts before I did that. There we go. The TLT. That's the Lehman 20-year T-bond fund, and it's trading at 124.59, up 92 cents. Now, is this going to be a situation where bonds and yields are in the position where we're talking about the Japanization of our bond yields continuing? The way I'm looking at it, this is a leg C. It's not very big. If leg C, I'd say 125.20s to 125.50 is what I want to see. I didn't actually want to see it so quickly in a leg C. I wanted it in a leg B. So this says to me there's a good chance that I need to draw this in right now, and that'll be an arch formation. And that says the big test comes if there is a rally to a D and it can't break above 125.50s, doesn't roll over, or we're just stuck in this range. And I think that my thinking here is that we're in the range. That's number one. And number two is, let's just see the evidence, because my belief is that when this market finally has a decline that takes it under 21,300, 21,200 support, and it should do that at some point in the next few weeks, I would think, we're going to see the bonds rally and yields come down. That's just the way I'm thinking of it. Money flows from equities, the insecurity of equities to the security of fixed income. That's kind of the way I'm looking at it. High-grade copper, let's just do that, and then we'll move on. High-grade copper at this point, leg D, there it is. Leg D, and we'll see how this plays out. If it's going to be a sharp pullback from D in the Chapman wave, that's where you got to expect something a little deeper. You've got it in the weekly chart. It's so fascinating the way it's been steadily making cup formations to higher highs. That uses time, and that corresponds exactly to a leg D in the weekly chart of high-grade copper. Fascinating and good action so far. So now let's do this. I want you to look at, let's just go. Netflix right now is up 90 when we last looked at it. Now it's up 21. Powerful move. That's helping the QQQs. Yep, helping the XLK. The QQQs they made a new recovery high. XLK hasn't made a new recovery high. That's the S&P Tech Spider Fund. And the SMHs, where are they? They down 3 cents at 86.55. So we got to watch those two sectors because the QQQs have made new highs. Now, if you're looking at Google, I'm not going to this Alphabet. I'm not going to the Google A. This is Google, the Google Alphabet. What is this? This is the C stock. And it's in leg A, very strong leg A, single leg A, broke the resistance. Got to watch this closely. So far, it's good action. Apple, APL. Apple, leg C, very nice action, leg C. It looks to me like there will be a cup formation in the weekly, but if Apple takes out 147's support, that's really negative. It's at 149.26, down 30 cents. It's in leg C, and this pattern says it should try for a leg D. The higher it goes here, if it can go to the 150, 150, 150, 250 area, it's starting to tackle that very ugly candle of the 9th of June. That'll be really important if that can if Apple can get even halfway into the body, into the 152.20s, that'll start to say, you know what, we're going to retest the highs. We're going to use it this month to make a leg C in the monthly ends at peak D. Question about HGX. HGX is the Philadelphia Housing Sector Index. Yeah, I think that this is an alternate count. I think this is a D. It has all the characteristics of a D. It's a D in the daily, D in the weekly. I'm going to be watching the home builders really closely because that's going to be a clue for us at 83. If it drops under 278 in the next 2 weeks, that'll be very negative. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. So one of the things I said to subscribers this morning is we're going to be we've raised cash. We're in a little more of a cash position than we've been in for quite a while. We have an auto stock, which has done fantastically. We do have a gold stock, which is just started the position. And most of the others we've got to buy at certain levels on sharp pullbacks. That's kind of the way I'm looking at the longs at this particular point. Missed by a penny, a particular stock, which has done extremely well. What can I say? That's just the way it goes. Looking at Fortinet FTNT right now, trading at 40.42, up 19 cents. Leg D in the daily with very good technicals. It should just pull back a little bit and go higher. Trying to test the high that was made back on the 23rd of May at 40.68. So far, the high is 40.54. This is an inside leg A in the weekly chart right here. So it's a gray A. And it had made a peak E and had a big pullback for this stock. It's quite a big pullback to just under 36 from the 41s. And in the monthly chart, that all-time high, just above 50 back in 2015, pulls back in February, I think, of 2016 to the 24s. And where is it now? It's at 40.41. I think it's going to make a leg D in the monthly, which will be about 41.33. So it's acting very nicely. Question, would like to add more? I would add, if you're already in it, it means that you can take a different type of approach. If there's a pullback into the bottom of this candle of the 14th, the low is 38.65. That's over a point and a half down. I'm not sure when it will do that, but I would definitely in the low 39s, I'd add to that position, expecting that the leg up should start fairly soon. Okay, I hope that helps you. FEYE, FireEye, let's see where that is, FireEye Inc. You know, I looked at this the other day and then I thought, if ever there was a stock that was going sideways, you usually see these in this kind of pattern in the futures. If you look at Walmart for 12 years or something, it made this in the monthly chart, but this kind of rectangle formation sideways is very good and very bad. One is it sort of ties up your money and it's going nowhere. Because it's been there since May and it's now July. But what's really important is very often it'll break to the upside, come back into the rectangle, and then take out the downside support. So I'm just going to say, FireEye, I looked at it, I thought, I saw it go by on the ticker. It had that big pop-up maybe a few days ago. And I thought, oh, that's good. And this was pre-market. That's when I had a chance just to look at CNBC. And I can't remember what it was. I just remember seeing it go by, saying, "Oh, I haven't looked at that for a long time." And then I drew the rectangle, saying, "Stuck in a trading range." So I would not see anything. If you're long, keep holding it and put a stop. It's at 1547 on some part of your position at 1480. If it takes that out, I think it's going to go lower down this time. No, I'm just going to say to you, hold it for now. I'm not sure about stops or longs. It's just in a range. And if you've had it for a while, to tell you to get out is silly. To tell you to get in is silly. I just think it's kind of stuck. And as soon as it breaks into the 1630s, that is a breakout of consequence, and it's going to be very important. But it might take a little while to do that. FireEye, F-E-Y-E. Yeah, PPLT. PPLT, we looked at it a few days ago, had a fabulous move to the upside. Still holding very nicely up 11 cents at 88.75. This is the ETFS physical platinum shares, and it's trading in leg B to the upside. You know, I can't put an up arrow yet, but I can put the plus sign and call it a gray A and a gray B. I'm not going to change the color right now, but call it gray B. But it is acting well, because today should have been the day after yesterday's pop up and then closed near the lows. Today should have at least tested the low of yesterday, 88.51, and it hasn't done that. It's at 88.75. This so far is very good action. I'm suspecting that there's a chance that it's going to get into the body of the candle of the 14th between 91.20 and 89.19. That sounds good, doesn't it? Yeah, I think it's going to break the high of yesterday at 89.39 to start leg C. And then I'm not sure if it's a vertical move to the upside or whether that's where it starts to stall. Be careful only if it starts to go into the middle of the gap, somewhere around 88.30. If it goes under 88.30, expect it's going to test 87.78. The reason why I'm sort of slightly biased towards it right now, even though it seems to have pulled back, is that platinum is up 30 cents at 930.60. After yesterday's candle, getting into that wick of yesterday, the inverted Chapman wave Roman candle, is really important. It hasn't been able to hold it. But in the next 2 days, if you see this trading at 919.40, anywhere in the 91, in the 9.3, now I can't remember what. Yeah, 933. If it goes to the 933.40s, there's a real good chance it's going to test and then break the upside of yesterday. And as I say, 919s is the 9-period moving average support. It'll only start to indicate that it wants to test it if it takes out yesterday's low of 922.20. Okay. Now, a couple of questions I've had about a question asked VIX. Oh, the VIX, not the V. Oh, rather VXX. VXX, that was the question. All right, sorry, GT. So what is the question? VXX, not VIX. VXX, 9s and 11s now. Wait, so let me just check. Okay, let me just put it this way. The VXX is the iPath S&P 500 VIX short term. Okay. And it's based on the volatility index. And it's trading at 1172. This pattern I've seen so many times, it looks like an alligator opening its mouth there. But most importantly, the MACD is turned negative. Stochastic is at 3.35%. I think that we are getting really close to some kind of a spike in the VXX and the VIX itself. But it has to be accompanied by a follow-up of bad news. We can't have whatever the thing was that made the market go, the Dow go down 120-something is now down only 84. Whatever that was, wasn't good enough. I've said it over and over. You've got to have persistent negativity. And it has to become, you can't have a splurge of different negativities. It must be one theme. Healthcare, taxes. It's got to be, and it's got to be repeated over and over, regurgitated then by the media. We don't have that. And that's the reason why you're seeing the VIX low and you're seeing buying pressure come in. So VIX, the VXX, I think, yes, I see a move to the 12.42, 12.80 area, but it might be maybe next week or something like that. At this particular point, there's just too much buying pressure. I hope that answers your question. So the next thing is, let me get there if I can. There's time, yep, this time. So I'm going to go right here. Basil, if you have time, can you post your XIV chart? Thanks for all you do. Hey, I kept meaning to do that, and I forgot all about it. Okay, Paul says, trust me, the gold is doing, GLD is doing just fine. The best trade till the end of the summer. Paul, I'm looking at gold, and I think you have a chance of being correct there. A little later on. Time, what did I say?
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Yes, we're back. So this is a question that I wanted to get to. XIV, which is the VS inverse VIX short term. Look at this. I could not understand yesterday why the XIV was up sharply. It had a really good move, way out of proportion to anything that was going on in the general market. And it's the way it's weighted. And the other thing is that it's made a leg E/B. I'm the way I'm looking at it, I do think it's a B. I think we're going to go to a C and a D. And the monthly chart, look, is in leg C, and that says any pullback will be transitory because you should still go to a D in July, end of July into early August. And if you look at the Dow INDU, look at this, leg C as well. Everything seems to coincide. So far, things have become very positive with that breakout on Friday afternoon. I think I'm not see. Let me. Oh, I can't read that. If you have, I just did that. The XIV chart. Yep. NLY, question about NLY. Let me just do that. That's Annalie. It went to a peak DEF. Now look at this. In the Chapman wave methodology, I love this. Look at this. A D, finish up an E, and right there, and the technicals turn down, and it goes all the way from 1270 right there. On the June the 26th, right, 1273. And it pulls back to today's low of 1170. Hey, I would call that a pretty big pullback, 4% so far today. Gap down, something's wrong with this picture. It went to a D in the weekly. So Annalie right now is going to a D in the monthly, leg D, it's still leg D, in the monthly, Annalie Capital Management, down 47 cents, 11.80, down 3.79. It's a D in the monthly. I have to wait for the week to finish before I can put a down arrow, but I'm pretty sure I'm going to have to put a down arrow. And an F with the perfect lightning bolt. Gap down, rally up, gap down again. So we're going to watch, is it going to try to form a base in the 1160s, or is it going to go lower? That's the question that we'll have to answer. Yes, so Annalie raising capital. I like that. Raising capital, I'll have to have another look at it, because if it's just pullback because of other areas, momentary areas of weakness, that's one thing. But if it's systemic, we've got to be real careful, because this could go very quickly to the 1090s. Okay, so we'll keep watching that. Next question was WLL. So Judy, you had asked about this before, and at the time I said WLL, right there. WLL, which is Whiting Petroleum, had a potential for a move up, that the MACD was rallying, that the stochastic was better but not good, and yet the price just doesn't get going. So I've avoided it. I had it down. Once you mentioned it was on my list, and I thought, okay, maybe. But it just is something's wrong. In fact, Whiting Petroleum, watch out. This thing could be down in the threes if it keeps up like this. Please be careful. Now, you might be right, but I'm just saying please be careful. Okay, so before we wrap it up, I will be doing a couple of webinars. It's a series that's going to be coming up. We'll have it all advertised very soon, today or tomorrow. It's going to be very exciting. For me, it's very exciting because it's dealing with sectors and what we're looking at in the different sectors and the chart formations that you should see. I mean, look at this in General Motors. Look at this beautiful pattern of the cup formation right here. Look at that cup formation in the daily. Beautiful left side, right side price time match. Look at this in the weekly chart. You got the deep cup. Does it pull back or does it continue? Why on earth at this particular point would the autos be rallying? Well, they're rallying because I think jobs, people are having a little bit more security, and they're buying instead of doing what a lot of people have done for years and years, fix their cars. That's why oil is so bad. I'll be back tomorrow. Have a great day, and thanks for being here. And, of course, listen to the other shows. Should be terrific shows coming.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,